The oil has just broke above this major downtrend line, and there was this gap. And what happened to this gap? It was the surprise announcement by OPEC Plus to reduce their oil production starting this May. And with that reason, very quickly, I believe that the oil is going to test this another major downtrend line. And I do not think that is an issue for it to break above 100 US dollars. And when this happened, I believe that the crude oil will very quickly trend to the other resistance at 125 US dollars or even beyond that. We're going to discuss both the technical and fundamental reasons for this reversal. But before we get into this topic, please take some time to read into the disclaimer down here. Let's first discuss about the technical reason on this potential reversal, and perhaps it's going to trend up to break above 100 and beyond 125 US dollars. Now let's look at this, construct the major downtrend line, which is what I will call this as a primary downtrend line. And I'm going to label this. And next, I'm going to construct this, the secondary downtrend line. And let me just give you some tutorial on how to construct that. Now, usually we'll reference to the first reference point will be towards the left, but somehow I need to have at least 3 significant peaks. Now, then I will try to break the rules a little bit at times, that instead of using the left, I'll use the right as the first reference point, and then I will make some adjustment here. It's fine to make some adjustment along the timeline, and I'm going to make further adjustment, and you realize that how the tracker track all these significant points by itself. Yeah, so this is a close opening price here, this is the high, and this is the opening price. And now I have at least 3 significant peaks, and this qualified that this is a standard or classic downtrend line. Now it's important to identify the standard and classic downtrend line, because once it broke above this downtrend line, it means business, that there's a likelihood that it will continue to trend up. And I'm going to label this as the secondary downtrend line. Okay, so secondary downtrend line. Now let's do some study about gaps right now. And what we are seeing here is there is a gap here. And how do I define gap? Now, gap means that it's a runaway in prices. And now it is also a confirmation of a clean breakaway from this downtrend line. And what I'm seeing here is, let's do some projection here, is that I do not think that it's too difficult to see the next few days to the next few weeks that the crude oil will continue to rally. I think it should be quite easy to do that, but come to a point that you'll meet some technical resistance, which is another major downtrend line. This is what I call the primary downtrend line. Now it may pause there, then after that that forms the 3 peaks here, 1, 2, 3 significant peaks. Now along the timeline there will be some volatility, it may move, it may test again, I do not know, but let's see how it goes. And ultimately what I think is that it will break this major downtrend line. Not too difficult about it because of some fundamental reason. Now I think many of us believe that the inflation is still ongoing and some of the commodities are lagging behind. And what is taking the lead today is most of the edible commodities are taking the lead, the gold are taking the lead, but crude oil is lagging behind. Now as the inflation continues, I believe that the crude oil will somehow catch up along the timeline and it start to move up. Of course, when that happens, we got to check on what's the fundamental development then, and to check whether it hold true to it. Now that's my projection for crude oil as of now. And something that I enjoy doing is to keep my mind really active about what's happening to the market. And how do I do that is that I will at times look into the short-term trades of any markets in this example, we're discussing about crude oil. Now, since the weekly chart is giving me a strong indication that the next few weeks that is moving up, so if I were to look into the daily or the 60 minutes or the minutes chart, since the trend is moving up, I will highly likely look for buy on dips strategy. And that's how I do it. So I've included some information about the different types of oil below. You can take reference to it later. Now let's move over to the fundamental reason about this gap. The direction of especially the commodity prices, it all depends on one thing, the supply and the demands. Now when the supply is lesser, but yet there's a lot of demand, naturally the price will go up. Now, so what happened to this gap is on this 3rd of April 2023, OPEC Plus announced a surprise oil output cuts. It means that they're going to reduce the supply coming May. And this year in January, China has its reopening from its COVID-19 lockdown. And the expectation is that demand will resume. Now, with the ongoing demand and with a lesser supply, it is only natural that the oil will continue to move up. Let us read into this news again between OPEC and OPEC Plus. Now, OPEC Plus have many more nations, oil nations coming together in this announcement, and it seems to me this announcement is a surprise announcement. Now, so what is your thought to be in the future with so many nations coming together? What will be the direction of the oil prices? Feel free to leave your comments below. I love to exchange ideas with you. I have also included some of my past video tutorial relating to today's discussion. So keep watching it again and again. You too can get into the market with greater precision. I always enjoy studying the correlation between the markets, and I hope today's sharing it will be helpful in how we invest and trade. Really happy that you have stayed through this video. You have many great trading weeks ahead.